What you need to do if you're going to try and minimize taxes over a lifetime is you need to decide every single year, does it make sense to do those actions? Do you want to push those expenses into the current year, or is there something in that next year that makes sense to leave those expenses in there to reduce that income? Hey, loyal viewer, you are back today in 2025, and boy howdy am I happy to have you. It's the year of the mustache. This is for you. Let's get to going. What are we talking about today? We're talking about tax planning. And we talk about tax planning a lot in these videos, but ultimately, what is tax planning? It depends. What's your goals? Are you looking long-term? Or are you looking short-term? What key factors are at play for you? Where's your money going? How do you get your money? All kinds of factors at play, but what we are gonna dial in on is, are you looking to minimize your taxes in this current year or over a lifetime? And that can mean substantially different things. We're gonna pull up some slides right here, and we're gonna take a look at 3 examples that illustrate this. And here's the key point we're pointing out right off the top. Minimizing taxes in the current year can be fundamentally different than long-term tax and financial planning, and they will lead to drastically different actions that you have to take to make sure you get to hit those marks. Example 1 we're looking at is business expense tax planning. Now, if you want to minimize your taxes in this current year, what are you going to do? You're going to push as many expenses into the current year as possible. You're going to delay as much income as you can into that next year. And what's that going to do theoretically? It's going to lower your income taxes for the current year. Now, if you're trying to manage the lowest amount of taxes over a lifetime, that could mean a different decision. In this example, what you need to do if you're going to try and minimize taxes over a lifetime is you need to decide every single year, does it make sense to do those actions? Do you want to push those expenses into the current year, or is there something in that next year that makes sense to leave those expenses in there to reduce that income? Maybe eat more taxes this year. Same thing with pushing income. Should you not do that so that you get hit with that income in the current year, actually get taxed more this year so that you pay less taxes over time? A decision you have to make. How are you most focused? Are you most focused on saving money today, keeping as much cash in your pocket as you can? Or do you want to build wealth over a long period of time? Yeah, no right answer, but you have to determine what's important to you to start making those decisions correctly. Let's take a look at a second example. This is something we've talked about in depth here, and we'll continue talking about, is the traditional versus the Roth decision in terms of your investment accounts. Now, if you're trying to lower your taxes in the current year, you have only one decision. You're going to go with that traditional account. Maybe a 401k is a common example, right? That's going to lower your taxable income in the current year. It's going to create less taxes this year, deferring them ultimately when you withdraw that money out of your 401k down the line. Now, if you want to manage lifetime taxes, this is where, of course, the Roth account comes in. The Roth account allows you to put money into it that's already been taxed. It can grow in investments tax-free, and when you take it out, you don't get taxed on it. The key difference between that and the 401k, you have to have both of these accounts to effectively manage taxes over the long term. If you're going to effectively minimize the overall taxes you pay over a long period of time through retirement, you absolutely are going to have to have both accounts, and you're going to need to be working with someone to understand what that plan looks like out over a number of years. And example number 3 we're looking at for this specific idea is depreciation. Now, you have a rental property, you have depreciation. What would make sense to lower your current year taxes the most? You're going to shove as much of that depreciation in the current year as possible. You're going to take all that bonus depreciation, all that Section 179 depreciation, boom, you're going to take it. All that goes off in the first year. Big old tax deduction. Now, what if we want to do lowest lifetime taxes? It could effectively mean pushing all that stuff up, but what do we need to be considering? This has a lot to do with the financial element as well, a financial mindset of how to think about these things. That depreciation comes back. So you're going to get taxed on that depreciation when you sell the property. The personal property within a property if you've done a cost segregation or something like that. But ultimately, you will pay tax on that depreciation unless you have a plan to defer those taxes over a lifetime, ultimately perhaps resetting your cost basis with something like a trust. And again, on this one, the bolded point is you need a plan, and you need to have some professional insight into that plan in order to make it work over the long haul, right? You're going to have to be checking in on these items each and every year. There's no other way to do it other than to make sure you are optimized every year and making those little decisions that are going to be little in the immediate, but add big wealth gains over time if you do things the right way and set things up in the right spot. Now again, this is just a few examples to illustrate the difference between minimizing your taxes in the current year and perhaps minimizing taxes, ultimately getting the most money over a lifetime. And you need to be sure which one you're most focused on in order to communicate that to somebody who you're working with, in order to make those decisions yourself. So again, you're putting yourself in the right spot so that taxes are optimized, and they're ultimately optimized in a way that makes sense with how your mind works and where you want to be heading. Current year optimization versus lifetime optimization of taxes. There's not a right answer. You just have to choose which direction you want to go and ultimately know the things you have to do to facilitate that.